to cough up more than 50,000 crore rupees after the Supreme Court's verdict on the adjusted gross revenue. But telecom companies aside, several public sector units like GAIL, Power Grid and JNFC, they are also staring at hefty penalties as well. This because a small portion of their revenue comes in from the optical fiber cable that's laid across the gas and the power distribution networks. So now tell us, put this into context first and tell us how these numbers stack up as well.
Well, this problem is actually extended to non-telecom companies as well, Nigel. Huge numbers. So first, there are license fee dues and there are spectrum usage charges. So just breaking up the numbers in terms of license fee dues that the companies have to pay as a percentage of the revenues, that is around 21,000 crores for Bharti. Vodafone has the highest number. This includes the penalty and interest for these companies. Reliance Com, Tata Group has around 10,000 crores of dues. Something like a Reliance Jio has 13 crores and the stressed company, that is BSNL, also has to pay close to 2,100 crore rupees. But that is not it. It, as I already said, it extends to some public sector companies as well, the likes of GAIL, Power Grid and GNFC. And there the amount is quite huge because, as you rightly pointed out, these companies also have some portion of revenues coming in from the telecom sector. So for GAIL, it was around 0.5% in FY18. Power Grid also had a small amount. And for GNFC, they reported to the exchanges that they have received a notice from the Department of Telecommunications and they have to pay 15,000 crore rupees, which is 20 times the FY19 profits. For GAIL, it's around 17 times and so for Power Grid. Now, telecom companies also have to pay 55,000 crores as spectrum usage charges. So adding both the license fee and the spectrum charges, telecom companies have to pay somewhere around 1.47 lakh crores. And if we include the amounts for non-telecom companies as well, it is somewhere around 4.6 lakh crores for the entire basket. So that's a huge amount. And AGR dues need to be paid in next 20 days. A lot of these telecom companies have filed a review petition. GAIL says that they are not liable for anything, but they have not made any petition as far. And JNFC says they are still actually analyzing the situation and taking some legal recourse. So all these companies still under a bit of confusion as to what to do about this.
Okay, all right. Interesting stuff there. Sonal, thanks so much for that. Well, in fact, we also caught up with senior advocate Meet Malhotra to find out his take on the non-telecom companies coughing up the AGR dues. Let's listen in.
The problem that is underscored with what has happened to the PSUs is what the essential problem was. The court refused to look into this issue at all, saying you signed the dotted line. The court did not look into the absurdity of the situation, which absurdity is brought out now when the government's own companies are in more trouble than the telcos. So the general logic prevailing was that the telcos tried to be too smart by half, and therefore the court came down heavily on them. The basic anomaly is what has led to this situation where the PSUs, for no fault of theirs, and believe me, they hold the same licenses. So legally speaking, it will be very interesting to see how the government or the court now tries to distinguish the case of the PSUs with the private operators.
Okay, let's see what happens in 20 days. But moving on to a CNBC-TV18 exclusive, what seems like a setback for auto companies. Sources tell us that the Road Ministry has rejected auto companies' respect to postpone BS6 rollout deadline. Anu Sharma joins us with more details on the phone line. Hi Anu, good morning.
Hi, good morning. So sources told us that automobile companies did approach the Road Ministry on postponing the deadline for rollout of BS6 emission norms, but we've been given to understand that Road Ministry had rejected that request and it remains firm on the deadline of April 1st, 2020 for the rollout of BS6 fuel emission norms. And as far as Road Ministry is concerned, the thought process is clear that the availability of BS6 fuel is the primary driving force for this rollout deadline, and there is no thought to postpone the deadline. And yes, there is that other thing that FADA has approached Supreme Court for allowing them to sell BS6 vehicles beyond BS4 vehicles beyond April 1st, but then that is for the Supreme Court to decide. As far as the Road Ministry is concerned, there is no thought to postpone the deadline, and April 1st remains the deadline for rollout of BS6.
Okay, all right. Thanks so much for that. Anu, well, yesterday in an otherwise very strong market, there was one stock that was under pressure. That's Marico. You pull up the intraday chart, you'll see that the stock really moved to the low point of the day, while our markets went to the high point of the day. Now, the company has released its quarter three update, and Mangalam joins us to run us through those details. Mangalam, does it indicate some revival in consumption? Actually, I was looking at the release, and it appeared they were quite cautious.
They were rather cautious, Nigel. You know, we were looking at the release, and a lot of people were expecting that there could be some bit of revival in the consumer sentiment, given there was festive season, the government dole-outs to the rural sector, and it was a decent monsoon as well. But the company unequivocally went ahead and said that the consumption trends failed or belied expectations of a beginning of a revival in demand. That's not all. While parts of their portfolio, the likes of Saffola and health foods, did well. Remember, this is because of the protracted strategy that the company has towards these products, and also on a low base. So that is something, you know, which does not indicate a broad consumption sector revival. The bigger point is that their consumer goods or their personal care goods, which account for majority of their revenues, the likes of Marico, Parachute Oil and the value-added air oils, they've seen a fair amount of a decline. And despite a double-digit growth in their foods business, which accounts for a smaller part of their revenues, we saw an overall volume decline, or that's what the company is indicating for their India business. There could be an overall volume decline, and that means that the quantum of decline in their main products is much larger. So that is something we'll keep an eye out on as and when the company reports their results. The international business for them did well, and remember, we are talking about benign input prices, so the margins have expanded for them as well. But the bigger point is, where are the volumes? The stock currently trading at around 41 times, not particularly cheap, but not as expensive as well if you take a look at the other FMCG companies. But then again, it's not showing the sort of growth that it is. So up until growth revives, there could be a consolidation in the stock, and no upside trigger until the volume growth recovers.
Okay, so no upside trigger until the volume growth recovers. Thanks a lot for all those details, Mangala. But as we slip into a short break, let's listen into some market opinion now. Harish Krishnan of Kotak AMC says that consolidation across businesses may continue. He's also betting big on auto ancillaries as they have shown better sequential growth. Listen in and we will be back with more.
This again looks like an year with low, maybe double-digit kind of returns, and with a drawdown or with a volatility of say a 10-15% at any point of time. So it's going to be that range-bound, choppy market, but with an upward bias. We are seeing consolidation across businesses, and that is a process that will continue even in this year. The third thing that we continue to see is that we are going to see quality, good businesses continue to command a premium. We think that this is the time to move from consumption oriented to investment oriented. Clearly there has been a significant amount of supply side reforms that the government has initiated, and we believe that this is the point in time wherein the investment cycle will slowly start taking fruit. We would like to believe that there will be greater participation in the markets. So instead of 15-20 stocks doing well, we'll see that breadth improving. It's not going to be still the heydays of 2017, but we will definitely be in an improving trajectory. And third link to that is that we think that therefore mid and small caps offer a far greater value at this point of time. The next 3 months is clearly going to be dominated by the BS6 transition, and therefore a lot of data points that will come through could be of inventory clearance, could be of higher discount. Out there in auto, we think that auto ancillaries actually will be a far better play to play the volume growth sequentially improving from here on rather than the auto OEs per se. We have moved from consumption to investment as a theme, and within investments, capital goods is possibly our biggest position, along with cement and gas utility. So these are the three big areas where we continue to have very large exposure. We think that the tax cuts will result into small amounts of supply or small amount of capacity announcements getting created, more from the FDI channel as well as in few process industries.